Hey everyone, it is Evan here from the Trade Risk on Friday, June 14th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump right into our market technicals dashboard. You can see markets were down here on Friday to close out the week, slightly negative. Russell 2000 leading or underperforming to the downside, minus 0.83% on Friday. But if we look at these 5-day change numbers, the 1-week change numbers, you can see we are in green territory right across the board. NASDAQ 100 almost 1% to the upside here. And that's important because we did have a big week to the upside last week. And the fact that we could hold on to those gains and add to them, I think, is credit to the bulls case here. When we look at some of the simple moving averages, we are above most of them in the major indices. The Russell 2000 still lagging a bit, 50, and the 200 SMA, it is below them. If we scroll down to the bottom here and take a look at some sectors, we have discretionary, transports, and utilities, an interesting mix to the top end here of the past 5 days, something we haven't seen those particular three grouped together as performers. And on the downside, we have semiconductors, we have biotech, and we have energy, all in negative territory. When we look at some of the major markets here, natural gas up at the top of the list here, 2% over the past 5 days, followed by the dollar and the S&P 500. And on the downside, we have a little bit of an unwind there in volatility, crude oil, and silver. So let's jump into the charts here, starting off with the S&P 500 weekly time frame. This is the cash market where we always like to start our analysis in these videos. And we can see we were up 62 basis points this week, and it was a narrow ranged week. Take a look at the size of the range that we had last week. All the way from 27.28 to 28.73, 150 point range. And then take a look at this week, about 1/6 of that size, and really just kind of holding sideways, attempted to push up, kind of pulled back off of those highs, and sort of an indecisive, maybe even indicating here that we're a little short-term frothy and that we need to digest a little bit. And I think that that's a very reasonable thing to expect at this point, given the fact that we had such a fast move here. After a 5-6 week pullback in the markets, we saw a 1 week kind of reclaim of 50%, 60% retrace. And so some, kind of sideways digestion here and maybe even a slight reset, I think is perfectly reasonable and well within the cards of expectations for next week. The same comments we've had the last couple of weeks now, or the last couple of videos. 2,800, I think as long as we can hold above that, even if we pull back to that level and we do some constructive basing out above that area and not completely give back this candle here, this range from this candle, I think that would be in the bulls' best interest and would certainly keep this market pent up and, quite honestly, as bullish as possible at this point. Otherwise, 29.41, 29.45, those are the all-time highs to shoot against to the upside. But I think, worst case, we would go sideways here for the foreseeable future, kind of chop around here. And that's not the worst case in the bull sense. Worst case, of course, would just be a very fast unwind and drop, losing all of the progress here back below 2,800, losing these lows, and that really sets us up for a bigger pullback. And that was sort of the thesis coming back from last Friday's video a week ago, was this, the lows from yet last week now, 27.28. That is a good line in the sand to use for the intermediate term for this market. If we start to lose these lows, then sort of all bets are off, and we look at a bigger sort of pullback in the market, broadly speaking. But until and if that happens, we want to go with the last critical event here. And that last critical event, in my eyes, was this kind of outside bullish reversal week. And so long as we can hold above 2,800, I think things are pretty good for the bull case. So that is the S&P 500. Those are the relevant levels we should be paying attention to. If we go down to the daily chart of the S&P 500, you can see, again, very tight range trading this week, just basically sideways. And again, in the short term, I would not hate the fact of pulling back further to 2850 to the low, even 2800s, to just sort sort of reset here, put in some type of more meaningful higher low, and then go make another attempt to the upside. But we'll see if that happens. So far, the market seems to be choosing to digest the last week's run up over time rather than a pullback in price. Same levels that we just talked about here. That's pretty clear. Another kind of encouraging note here towards the end of the week is that we got a little bit of a rollover here in the VIX. So basically we had the VIX kind of holding tight here around 16, while the S&P 500 was, pretty much trading where it's at. But now we're starting to get a little bit of a breakdown here in VIX, while we have the S&P 500 still not really moving out of this range yet either. So perhaps a little encouraging fact there that we're seeing a little more kind of fear and uncertainty kind of come out of the market, protection otherwise in VIX. So let's get into some of the other majors. Now we'll go to the IWM here, and I think this is still where it is worth watching and paying the closest attention to, because the Russell 2000, broadly speaking here, is still underperforming over the past couple of weeks, past couple of months, and in this range here, it's still at the lower end of it. It did play a little bit of catch up this week, but it kind of gave some of that back here on Friday. Again, this is the weekly picture, so we are still holding on to last week's gains. We certainly tried to push up. Things were looking good midpoint through the week. The Russell started to actually outpace the other indices, and then we kind of reset a bit into the end of the week. So Russell, I still am looking at about this 152 area, and then we have the lows all the way down at 145 from last week. Again, last week's bullish week was still an inside week, so this range here was still totally within the realm of the prior week's bear candle. So that's interesting to note that the Russell didn't have that outside bullish week like the S&P or the Qs. It's trading at the lower end of this range here, so there's still some reluctance, some hesitation by small caps, and we're waiting to kind of see here if this can play catch up, or if this is the canary here that is going to roll over first and put pressure on the overall market. So Russell 2000, I think, is a good spot to take some cues about this market and pay attention to this one into next week. Now the NASDAQ 100 here, again, tried to push up throughout the start of the week. It failed a bit, kind of traded back to its lows. It still held on to all of last week's gains and added a little bit to it, but given the way this candle formed here on the weekly chart, it looks like it may want to kind of come in and pause a bit and maybe pull back into the mid 170 or into the 170s, generally speaking, and we'll see if we can put in some type of higher low. Now, the only other interesting comment here before we start racing through all of the other major markets is that we've really had this interesting dynamic here where we've had the S&P 500, broadly speaking, which has been just generally on the rise. We've had the US dollar, which has been, generally speaking, again, on the rise. We have bonds, which have been on the rise over the past couple of months as well. And now we have gold, which is rising and breaking out here and starting to move to the upside. So it's quite interesting that we have this scenario where we have all of these major, markets all working themselves higher. And traditionally, we don't get such agreement between all of these in kind of the same time frame. So it'll be interesting to see, which one of these is sort of telling the truth and which one's the last man standing in the coming weeks. I think they're all kind of an interesting relationship to watch right now, and I'll just leave it at that for you to think about and do some further analysis on your side. If we go to TLT first, you can see this was down just slightly here on the week, but broadly speaking, it's holding on to the majority of these gains as well. It's doing like the S&P 500's doing, and after a strong run, it's mostly digesting through time here. It is looking like it wants to kind of hold in around this 130, but we still basically have a shorter term range between 130 and 132.50, a little bit of short term chop in between that, and we'll see which way this ends up resolving. Now, if we go to metals next, you can see GLD did close slightly down, but totally flat here for the week. It tried to push up. In fact, it had this gap up on Friday, which ended up giving a little bit of it back here and wasn't able to hold on to those gains. But the fact that it's attacking highs once again, the fact that the MACD still is holding up here, trading at year-to-date highs, trading at multi-month highs. This is an interesting spot for gold. We saw a lot of volume come in over the past couple of weeks on the breakout, and I'm encouraged by sort of the technical action that's unfolded here in GLD. And I think the buyers really do have some good footing on this market right now, as long as it can hold above. If it could hold above 125 in the short term, then I think this really sets up nicely here for continuation, but we'll see if it can do that. And really it's silver, which again I want to see play catch up and really get above $14 and start to move to the upside as well. This has been a little more reluctant here. It's kind of hanging out underneath the range from 2018, so I'd like to see silver kind of really push it to the upside and start breaking out as well, to give kind of the metal side of things all around more of that bullish rotation. So last but not least is we have commodity oil here. So oil on the week was down about 2.5%. It held on to last week's lows. It's a little bit messy here, kind of chopping around. Still looks like it's in a real tough spot. It is extended to the downside. So again, some mean reversion back up towards the 12 area is probably not to be that surprising, but still, from a midterm perspective here, this trend is still to the downside. The MACD is negative, although rising. So it's kind of choppy there, and I'll leave it to sort of the day traders to be playing around in that market. And we have natural gas, which is still trying here to put on some type of floor. Again, this is trading just under its or just above its year-to-date lows. From a bigger picture perspective, this thing is basically pretty horrendous on all time frames, so there's plenty of work to do. It is extended to the downside. Again, some type of pop back up into 2150 or so might be in the cards. Again, I think the best thing this has going for it is that it's probably hated across. It's hated so much that it might be good at this point in terms of a contrarian play, but technically everything's still kind of pointing down here for natural gas. Now, if we jump into some of the sectors here that help move the market, we have discretionary at the top end here. You can see it's been basically just the V shape continuing from last week's lows. Really not much else to say about it. I wouldn't really feel comfortable chasing this. It does have its next relevant highs and pivot up here around 121. Seems like it's marching up towards that level, but the way this has extended itself in such a quick order here, it's just too much of a chase. Need more of a reset and some structure to trade against. Otherwise, not really seeing much opportunity there. XLU, a little more opportunity here just because this recently had emerged from this $59 level, kind of tested it, retested this area earlier this week. Bounced off of it. MACD continues to rise, trading at new closing all-time highs here. So utilities certainly seem to be in favor here and are continuing, not too extended to the upside. Last but not least, the top three is Staples. Staples here, again, lots of volume coming in here, pouring over the past 2 weeks now. Really straight line V-shaped rally, taking out the highs, extended to the upside. Again, tough chase here, but it's working. It's in favor, and a lot of these individual stocks under the hood are, showing some constructive patterns there. On the downside, we have biotech. Biotech really is underperformed this week, minus 1.65%. Really hasn't suffered any new technical damage. In fact, I think this is one of the more interesting markets right now. I still like the fact that the MACD is positively diverging inside of this range, but this range here has gotten awfully tight for something like a volatile biotech, and I think the range, the breakout here will be an interesting one and an opportunistic one in the near-term future. $80.50 to the downside, $83.50 to the upside. That's the breakout range we should be paying attention to, and I think this one's pretty ripe here for some near-term volatility expansion, so we'll be paying attention to that one next week. Followed by semiconductors was the second worst performer this week. It was down 1.5%. It did have a nice pop last week, kind of giving back and pulling back to this area. I think if we get a move back down to 97 or so, kind of test these lows, see if they're good. If we can find buyers to step in there, maybe with some positive momentum divergence, that might set up, the buyers stepping back in again and maybe a new long setup towards the upside. And last but not least is IBB. pretty much the same thing. So we'll go to energy next. IBB just being the mega caps of biotech, or broadly speaking anyway. XLE, this one here also has been beaten up quite a bit over the past couple of months, but it is kind of looking like a bear flag here as it just kind of grinds higher, and really not much else to say about it. Pressure still to the downside overall here for XLE. So that is the scoop here for the week of the 14th. Thank you so much, as always, for tuning in and watching and listening. You can subscribe on our YouTube channel, follow us on the Trade Risk, and have a great weekend, and we will talk to you next week.